me, oh, sorry, money mine, I don't have that knowledge. I don't have any technical information about. Hello everyone, this is me, Money Mine again. Welcome back to my channel. Today, let us talk about the factors affecting stock price movements at the company level. It has been a good day today for the stock market. Stock prices goes up. Congratulations to those who had increased their share prices. However, those who had annoyed or confused to stock price movements, increasing your fears to enter to the stock market, or you've been thinking to go out of it just right now. Being annoyed or confused to stock price movements, increasing your fears to enter to the stock market, or you've been thinking to go out of it, especially today where prices goes up. Then keep watching this video. It may change your mindset towards market craziness. Instead of fearing, use it as an opportunity to attain your goals in investing, that is, to accumulate wealth out of it. As we're going to talk the three basic factors which affect the stock price at the company level. First, demand and supply. The law of demand and supply states that when the demand is higher than supply, price tends to increase, but will decrease when supply exceeds demand. The concept is where there are more investors who are willing to buy that portfolio, the price will tend to increase, and it goes the other way around. But what are the things or the factors which influence demand? Let's talk one by one. This is based on my personal point of view. Expected versus actual results on financial performance. Of course, investors expect to generate cash inflows either through dividends or by selling their ownership of that company. As the company meets its target earnings, share price decreases. Breakthrough on research and development. It's true that innovation-driven company would maintain its competitive advantage among other players in the industry. With successful R&D, in which technical feasibility is established, investors would buy more share of that company, expecting its revenue will increase in no time. See what happened to Gilead Sciences Incorporated with closing price of 63.20 on January 31, 2020, reaching to $84 per share when it announces positive results from phase 3 trial of its investigational antiviral remdesivir in patients with severe COVID-19. Innovation will always be the king in the market. It plays a greater role in each business and every industry we are playing with. Imagine Tesla beating Ford, GM Motors, and other giant auto companies due to its perfect auto innovation. Technology-driven companies have disrupted our generations. It kills some of our favorite establishments, right? Like malls, like blockbusters. Source of unemployment and affect our socialization. However, it gives us easy, fast, and comfortable living, isn't it? You know what? We are entering into a new generation, a 5G generation. Who is excited? They said that this one has a higher internet speed and could give us a smart city. Me, I'm very excited about it and been googling, been searching for the best 5G companies out there where I can put some of my investments. So the basic to investing, guys, is demand anticipation. Meaning, you analyze that company having the ability to increase its market value by increasing its profitability. That is, it can able to generate additional sales revenue in short period of time or within 10 to 20 years hypothesis once you held your investment long term. You have to know the difference between trading and investing. Trading is holding your stocks in short period, which is, for me, a pretty risky strategy. Meanwhile, long-term investing gives you more security, in which you can have the chance to accumulate more money once you reach your target selling price. So patience is the key. Second, dividends. Dividends play a crucial role to the movement of share prices. When a company makes dividend announcements, it causes a share price of such company likely to increase. But if it is lower than the investor's expectation, then the share price of that company will decrease. But if dividend declared is more than their expectation, then the share shall increase. Remember though that there are certain conditions and limitations before a company can distribute dividends to its shareholders, such as, but not limited to, inability paying its liabilities when they become due. So guys, if you have a dividend stocks, then you cannot or do not expect that you can receive a dividend every year. Third, the last but not definitely the least, management. Expertise and proven track record of key personnel of public companies affect share prices. Having a trusted, well-experienced management, like CEO and CFO, the public would trust that company. Having that perception, then the share price of that company shall increase. However, when the management lacks of integrity, you know what will happen. It's the other way around. So before buying an interest to that entity, you may want to consider trading the profile of its key personnel, so you would minimize the risk of losing your money. My takeaway here, guys, is search that highly innovative company which serves as challenger to major player in the industry. Their demand might be low today, hence you can buy their shares at lower price. When it finally gains its momentum, its stock price would tend to increase. That is, when they are able to get that share of the pie. It corresponds to a principle of buy low, sell high. Just do your homework. Be courageous and believe that company would be like Apple, Shopify, and Amazon very soon enough. The key is to believe yourself and believe your guts. Remember, no guts, no glory. One innovative company that I really admire is Facebook. It's almost every week it changed their platform and it's free. And now Facebook is joining the battle of e-commerce and even the ad streaming platform for its creator. Once it finally or they develop it 100%, the room for growth is really big. So watch out, guys. So if you have a big capital, then Facebook is a good investing right now. In like manner, consider the company's potential growth rate and profitability as well as the strength of its financial condition or balance sheets. Oh, accountants, come on. Here, you shall examine its debt to equity ratio, quick assets ratio, and the most important one, the current or working capital ratio. Moreover, examining management effectiveness is through return on equity, return on invested capital, and return on assets. Then compare them to industry's benchmark, as well as the ratios that we talked earlier. But you may tell me, oh, sorry, Money Mind, I don't have that knowledge. I don't have any technical information about you, and I even Googled it. I cannot even understand. I don't have even time to do it. Right? But don't worry. If you're tired of crunching companies' financial statements, which you don't even have those technical knowledge, then there's something that can help you. One I discovered is the stock card. Stock card has that functionality to help you out. I have included their link below, so check that out. I believe that it can help you to invest intelligently. Remember that you have to take care of your invested capital. So think 50% or do it in 100% research. There's something that can help you if you don't have that knowledge. Okay? Again, no one could predict the exact price of the stock market. We all know that it goes up, it goes down. But we can do our own fundamental analysis, the basics. All things starts with the basic things. No one could help us eliminating our risk to downfall. But we can drive ourselves to eventual success in investing, that is creating wealth on the stock market. We just have to help ourselves. Research that company, which must include company profiling, profitability analysis, financial stability. In addition, consider also the possible government bailout. Be fearless when other people are scared. Don't run when nobody wants to buy. Instead, build an opportunity out of it. Create ways to earn money in every crisis. Remember that in this time, you need to be money-minded. That's all for now, guys. See you again next week. Don't forget to subscribe and hit the notification bell so you won't miss my next video. Bye-bye!